Hey there traders, in this video here I want to cover a few things actually. I want to cover how you can use where other people have their orders in the market, and I also want to cover where a simple technical analysis like a simple trend line, which you're going to see on this chart as well, can alert you to trades that they're pretty much I want to say a walk in the park, but they are when you know how to decipher this stuff properly. Now this is tradings and trading tips, and this is more of a different look on how you can look at the markets. So I'm going to go back to Monday, and this is going to be a trade in the Euro US dollar. Okay, now I made a mistake in this trade, and I will point that out when it occurs. And but let me start walking through it. So I come into, I'm trading in the morning, and the Euro US dollar is having this nice run up. You can see it right here, right? Once it breaks above these highs, it's only a 5-minute chart, and I'm doing this just so you can see it more accurately. The time points I'm going to mention. So there was a, I want to call it a news squawk, but it was a that the move was going up and that stops were triggered on the rise through a level of 43.30, 43.50, okay? And the rate just kept on going up to 43.85, and there was news, not news like a release that we're going to hear, that we usually hear of, but just orders, I guess is a good way to put it, that were touted at certain levels. And there was offers that were seen between 43.90 and 4400, and there was more offers to sell. That's what an offer is, just in case people are going, well, what's an offer? Around 44.10. All right. Now, usually when you have, look, we're looking at the 4400 level. All right. A lot of people like to fade that move, right? Fade means trade against that level, even on this run up. But you can see right here as prices zoomed right through it with this big thrusting candle here. But here's the key: if there are offers at that level, what are just above an offer? Right. A lot of traders. This is 5 minutes, so you really can't see what's over further on the left here. But no doubt there's swing levels that you'll see on a different chart here. And what happens at these levels, just a normal pivot level, is people will look to short, and they'll put their stop just above that area. Now, a lot of people don't just go short when it hits that level. I say a lot of people, I mean more like the professional traders, know there are order blocks around these levels. So what happens is there's orders above those swing points to go short. So what I'm going to show you here, I'll use this for an example right here. Here's a swing level right here. Now ignore for a second this is a 5-minute chart, okay? I just want to make sure I'm explaining this so it makes sense. So usually we get right here, people go, okay, there's a swing level. Pretend it's an hour chart or a 4-hour chart, it doesn't really matter. And price gets rejected. So what does this mean? What does this tell you? A lot of traders are going to say, well, there's some sell interest at that price at 43.30. So what happens is more orders get placed here to sell, and right above that goes what? There's stops, right? Well, not just that, there's also sometimes there's orders just above that as well to go to short as well. But generally what you get is, people shorting here, stops are just above, and that's how it works. So when you hear about stops being flushed out, what that really means is there's been a run at this level, and the orders were kicked into short, but there's just too much buying pressure. All right, prices going up, takes out their stops, which if you're selling and you put a stop in the market, it's going to be buying that market, right? And that just accelerates that move up. All right, and there's it's a perfectly valid way of trading is to take advantage of that when these occur in the market. So what had come across the wire at about, well, I'm not going to say about, but exactly at 9:01 was there was orders there, and there were stops above that, and there was resistance at 44.30, and there was larger stops above that. Now here's the deal with that: you don't just short at these levels, right? So when you hear that there's a stack of orders to short right here, you're not just going to short there. I personally wanted some technical reason to do it, and you're going to see on a longer term chart that there's a trend line, and price you'll find here is just zoomed right up to that area and shorted. All right, so you don't just blindly short, right? You got to have a reason to short. So what happens here at about 9:33, around this area right here, another order comes out. All right, another blurb comes out that the euro dollar gets a kick higher, trades at the 44.15. right? And there was, rumors that the bank had bought $22 billion in bonds, right? What's that going to do? It's going to push the price even higher, right? So what happens is it pushes the price above that round number, the 4,400 level, where we know there are orders to short, and we know above those orders to short there are stop orders as well. And a lot of players that trade breakouts no doubt had orders above that as well to go long. Okay, so what happens is once the price had reached above 4,400, you can see what I'm doing right here in this candle right here. It's oops, don't want to go too far. Let's see if I can move this over a little bit. That's going up with some thrust, right? So you can see that something had propelled that price higher, and $22 billion buying, and then you have now stops getting triggered. It's going to rush even further, right? So the pair kind of hung out around here, around 44.14. Okay, but there are more sells at 44.30, right? So which is up here, 44.30. So what happens? You can see what happens. The price blows right through that, right? And stops were flushed. Flushed means dumped. They were taken basically above 44.50. So that's right here. Right here. Now, I hope this is pointing out something to you, and this is the purpose of this video, is to show you how these markets work. The bigger players, they know where the orders are. You can too. When you see a swing level, a pivot low, or a pivot high, you can almost assume with some degree of accuracy that there's going to be some orders right there. So what happens at 10:05? The news comes out. The news again, reiterate what that meant, was just saying what was driving this price. Now I want to show you. You see this yellow line up here? That is a trend line from a higher time frame. All right, let me just click down to that. 1 second. I got to move some stuff around here. No, I just drag it over. Here we go. Does that work? Yeah, that's good. Let's go to 1 hour. Now I'm looking in this area here. Okay, let me just go to 4 hour. Let me tighten up a little bit. So what you're going to see is from this. It was on here, but obviously you move it when new levels are put in, and you can see what happened. Price basically comes up right to this area and then bounces down. Okay, trend line. And what drove price up there? Well, right? Now price has to go somewhere, right? And believe it or not, prices are drawn to support levels, and whether they're horizontal or the trend lines that you see here. And if you go back in your chart, you're going to see a lot of times, and I'm going to show you in this chart here, how many times a trend line, it's a valid technical tool, that's for sure. And what makes it so valid is everyone can see them, right? Everyone can see them. So there's no coincidence this price accelerated right through here and turned right here. So all through what I was just going through, all through this 5-minute chart that, let me just bring it back over here, all through this level that I'm talking about here, I'm looking for one thing. What am I looking to do? I am looking to sell, because I'm seeing all these stops get run. I see this trend line sitting there from a higher time frame, right? What are the probabilities that's going to bounce? The probabilities for me were pretty solid. Now, I'm going to click over to a different chart. I'm going to go right to the 1 hour before I bring up the chart that I actually was trading off of. And let me just blow this up a little bit here. Okay. That was just pointing out some levels. As you can see, I said to you, look to the left, right? And you can see these levels here. All right. So now we know that price was being driven up through here. It was blowing out some stops, right, making it propelled higher. There were some sales some buys going on that affected the euro. And then look what happens, almost to the pip. It goes to short. Now I'm looking to short. So when price gets to this area, what do you think I did? I shorted. And one great thing I liked about this short was because my target was just in through here. This big, you can call them spikes, or whatever you want to call them. When you see these kind of things, for me, I like to see if either I can get a trade off of that somehow, use it for targets, even take bounces off of them, right? You've seen in my previous videos I like to play the bounce in through here. Price comes back to revisit, but they're also great for targets because price generally just usually drops right through, right? Generally, usually. I don't know if that makes any sense, but I like to use them for price targets as well as areas to take trades off of. All right, but so this trade set up nice. You know, it was the prices and what was moving the price up was being touted on the wires. You saw that happening, right? And then you see where price is heading to. You see that it's heading to a trend line, right? And then what happens? Now, I'm not saying that the trend lines move the market because they don't, right? Traders move the market, but there's always a point of reference. Price fell down. Now, I'm not going to just ask you to take my word for it because I don't like to do that. I'm sure, you know, I got nothing to gain by this, but I'm going to show you these orders and where I scaled out on another chart, and then we will show you what I missed. So let's go to the trade that chart that I was looking at. Here we are. Let me just move back over here to the 15th. Okay. All right. This blue line right here, this is after the fact. I'll tell you what happened here. This was kind of sad. But what happened here is price rallies up, right, strongly to this area right here. I want to short this area right here. This is where I was looking to short. So when price got to this area, that was my shorting area. My short area was at 44.69. My stop was about 25 pips up, which is great because the smaller your risk, right, the bigger position size you can get. And on certain trades, I'll go higher than my usual risk percentage just because the probabilities are just so there. So what happened was this blue line here, let me just move this. Well, I don't have to move it. I scaled out at 6-7 pips right here. Now you see what happened here. This yellow line is going to show, this line represents my ultimate target. And, well, it just missed my ultimate target by about 11 pips. And this is 6 o'clock in the morning. And, well, I'm not checking the chart at 6 o'clock in the morning. So price had rallied up, and I said, okay, you know what? It came pretty close. I'm going to scale out of position, right? Basically cut my position size in half. So take some profit off the table, go to stop. Stop goes to break even, plus a handful. Problem was on this day, there was a lot of chatter that affected the euro US dollar, and you can see that spike right here. And this is at, you know, noon. Price comes up, basically takes me out, and then eventually spikes down to the area that I had. And what I want to show you again about trend lines, you know, here's, you know, I guess you call it the origin. 1, 2, bounces here to a pip. And unfortunately, I missed, you've seen my videos before. These are my bread and butter kind of trades, you know. This setup right here was around for a long time. And when you get into these kind of trades, you know, the big moves up, you know, there's a lot of buyers in this area. I'm looking to buy, and you've seen this in my previous videos, and I totally didn't get this trade. And it would have been nice because, well, it went up quite a ways. So anyways, let me just bring up something here. 1 second. Okay, this is what I wanted to show. I just took out some, you know, information that's not really needed. So what you're going to see here is sold the market 44.68. Now 44.68 is right where I pointed out. 44.68 was the area. The stop, and this stop is 44.65 because of this. I did this at market, and I'll show you the stop placement later. But it was in this area right here, and buy market was getting out at the 4,400 level, and that was the 6-7 pips. And this is the break-even stop loss, which eventually got hit on this spike up right here, and it actually took me out by basically a handful of pips, and that always is irritating. But let me just grab one more. Okay, so I want to show you right here. This is at 9:20 in the morning. This is the next day because this trade was covered a few days, actually 2 days is what it went over. And here's where the bought the market right here, and scaled out half my position at 44.01, and the stop loss at 44.92, and that is right up in this area right here. Just so you know, it's 25 pips, so 25, 27 pips. All right, so that was the trade, and the point I want to make of this is, number one, you're going to miss trades. You know, I can't imagine why I missed this, but I love these kind of trades. But and also, you know, you're going to have targets set, and the price it's not always going to hit the targets, and you got to deal with it. You know, how you're going to deal with it, and that's exactly what happened right here. News can come out of the blue in the FX market, especially now the way things are going. You know, people are chatting up, you know, the lines, and you know, the wrong word comes out, and the markets, you know, they freak out. And you see what happened here with this spike. I got taken out on a spike, and it wasn't a news release spike, right? It was basically, you know, it wasn't like a non-farm payroll number, right? It was basically a meeting that was going on around this time, and that's what happened. So, you know, I don't say trade the news, but having an idea of what's going on throughout your trading days is pretty important. And also to have a plan. You know, I knew, you know, I was already up. It was over, you know, 2 to 1 reward to risk ratio. So scaling out makes sense, right? Bank some profit, go to break even, you know, protect myself. Now, the way the markets are right now, I'm not really into longer term plays. I was actually talking to another trader about that. I had some longer term plays. I'm not interested right now, simply because of the way the markets are going. They're just so, it's just crazy time right now. But you can take advantage of these nice big volatile moves in the market where you're getting pips, like 67 pips in a heartbeat. And eventually, you know, the trade did go down to my full target, which would have been 126, 128 pips, basically by you know, about an hour maybe, seeing this setup occurring and seeing what was going on in the market. So that's it. You know, if I could say take something from this video, I wanted to show you that there's more than one way to skin a cat, right? Looking for market weakness, looking for participant weakness, you know, finding out just logically where other traders have their orders placed, and what happens when they get blown through. You know, stops are kicked in and the price just keeps going higher. And also that you know, at any time, you know, a bank or a hedge fund can do some things that are going to really, you know, kick your market around. So you got to be aware of that. So it doesn't hurt to, you know, have something open that has, you know, some news coming through. Don't trade the news, right? But just know that if you're in a trade and something comes out and the market's going wonky, at least you have an idea why. And, you know, over time, you're going to know how to deal with that. All right, so let's wrap this up. I know this might be kind of convoluted and not make a whole lot of sense to some people, and I know some people are going to go, oh yeah, that makes a lot of sense. But I thought this would be good to get out because I've had quite a few emails regarding different ways that I trade. You know, there's just so many ways that you can make some pips in this market, and you just, you know, when the opportunities present themselves, you just be in a position to take advantage of. Anyways, that's it. I'm rambling here, and this video is over 18 minutes. So thanks for watching. Take care out there. All right, it's pretty crazy.